Hello, and a warm welcome to a new video. Today, something a little different. And I'd like to share with you, or rather be completely transparent about what I've been up to these past few days. More specifically, I want to tell you what exactly I did on Friday, because that's when I made some portfolio adjustments. Primarily, of course, the situation with Iran prompted me to take some action, as I believe it could still develop into a really significant issue for the stock market. And I simply wanted to reduce my risk exposure a bit, and that's why I sold some stocks and bought some others. And I'd like to share with you now a little bit about my thought process behind that. Maybe you can take something from it, and maybe you have a different opinion. Feel free to share your thoughts in the comments. That's why I'm making this video. If you enjoy this kind of video content, then please feel free to leave a thumbs up, and then we'll just jump right into it. So, before we begin, of course, the risk disclaimer that everything I state does not constitute a buy or sell recommendation, nor is it financial advice, but merely my personal opinion. Alright, let's dive right in. What exactly did I get up to on Friday? For one thing, on Friday I did a bit of CFD trading, which I do sometimes, but here a very clear disclaimer. Please don't do this if you don't know what you're doing. And I must say quite clearly, I've gone a little short here. Yes, I went short on Nasdaq, and conversely, the German stock market long, because it usually performs quite well. I actually bought that for my portfolio. We'll be looking at TradingView in just a moment. I'm really looking forward to it. Yeah, it's a bit of a playful thing, you know. Well, it's also with leverage, as you can clearly see. But as I've mentioned, don't do this if you don't know what you're doing. And that's why we'll move on to the actual stocks right now. So what exactly did I do? I sold off some shares, but I also kept them accordingly on my watch list. Yes, on TradingView, I have a watch list that's named just like my portfolio. And there I manage my stocks, keep a good overview. And yes, I track them, sell them, and sometimes even buy more if I see that I can optimize things a little. And there I sold some shares, which I then made a note of so I wouldn't forget to buy them back, or rather to keep them on my radar for when they become interesting enough to acquire again. And one particular stock that I sold is Upstart Holdings, the artificial intelligence company for personal loans, or generally for loan origination. There were these rumors, or rather the news reports, suggesting that some stress has emerged in the private loan sector in the United States. And for me, after I was already in the red here, I told myself, all right, we're in a clear downtrend, and it's entirely possible, quite possible, that we could still see a good 20% further down until we reach the support level. And then I thought, well, that's also a few €100, and so perhaps one doesn't necessarily have to participate in that. So the risk-reward ratio, especially in this particular environment, because of course, if stress now enters the system, yes, if the Iran war continues to, well, rage on, so to speak, I believe we definitely have more downside potential than upside potential. And therefore, the risk-reward ratio here was, at least for me, not favorable. Other stocks I've also sold, for example, include Hynix, which have simply already performed extremely well. And in such phases, it simply becomes quite challenging for these stocks when the broader market starts taking profits. And we also see here the valuation for Hynix is already relatively high. Normally, the stock trades at price to sales ratios of 3, maybe 4 when it was expensive. And here it reached 8 at its peak. So already very, very expensive. And especially when you have a market environment that is very stressful, where a lot of fear comes in, then such high valuations are relatively strongly reduced. And that's why I told myself, okay, there's already a downside risk of 20-30%. And if the stock then accordingly perhaps trades at a price to sales ratio between 5 and 6, I would become active again and buy the stock back once more. Lam Research is exactly the same topic, although he, from a chart perspective, it doesn't look quite as good as it does with Hynix. We now have here in the daily chart, I sold the stock on Friday right here with this this candle. This video will probably come out on Wednesday, because I want to show you the other two videos of the tanker stocks sooner, because I believe that's important, as I also bought them to act as a bit of a hedge in my portfolio. And so I sold the stock quite early. I think it was still over $200, but by definition, we're actually in a downtrend here, and it's quite possible that the stock could drop to around 100, almost $170. That's a good 20%. perhaps even touch the 200-day line. You never know how much further it will escalate here and bring more fear into the market. And we have exactly the same situation now. The price to sales ratio, even for LAM research, is already historically very, very high. Of course, compared to SK Hynix, we are generally at a higher level here because a US stock is simply valued higher. And that's why we're currently seeing a price to sales ratio of 15 at its peak, not 8. And yes, the stock has already pulled back a bit, but if we get into the range of 10 or even below that, I will definitely buy more shares because I truly believe this data center boom, yes, it will continue for quite some time, for several more years. And you can certainly snag a real bargain here. So another stock I've sold, for example, is Micron Technology. It's also Micron, exactly the same story, also just as expensive. And here it gets interesting when the stock is perhaps 20% cheaper. Looking at the chart, the stock is also on the verge of breaking through its 50-day moving average. I expect that next week, specifically Monday and Tuesday, I don't believe we'll see positive market movements. Otherwise, my short position wouldn't work out as intended. But nevertheless, I also believe that we should see correspondingly lower prices here. And I'm looking at around $260 if things go really well. I'd definitely buy more then. And I hope that by then my other hedge stocks, which I use to basically hedge my portfolio, since they run opposite, will have generated some profit so I can buy even more shares than before. Yes, another stock I'm super confident in, but which is just tanking, is Symbotic. Even though its quarterly numbers were always very, very good, the stock just isn't picking up. And that's why I told myself, okay, the stock can easily drop to $40 here, and then I'll simply buy it back again. Yeah, 20% cheaper, or rather 20% more shares that you can acquire with the same amount of money. That's quite significant, and that's why I told myself, okay, I'll then re-enter at a correspondingly more favorable price. The same applies to Harmonic drive systems. So I cinema buying. Well, yeah, they were facing a bit of resistance here, but I'll be buying them back again relatively soon because I truly believe that I was relatively strongly positioned there. I had invested relatively more money there, and that's why I said, okay, due to the significant amount, I'll take action here, and I simply want to reduce the risk and just step out of the market a bit because I don't believe I'll miss much on the upside, and I'd rather avoid the downsides with this stock. It can easily drop 10-20%. I didn't necessarily want to be involved in that, so I sold the stock. A few other stocks I sold, like Coherent, for example, that one has also performed quite well already. Yes, that one also has a relatively high price to sales ratio compared to its history. It's growing quite well, of course. Yes, so the valuation is certainly justified, or rather the stock definitely has potential. But if we then certainly reach a price to sales ratio in the range of 5 with continued pressure in the market due to the Iran war and whatever else might flare up, then I believe you can simply get the stock at a lower price. And I'm keeping an eye on it. Clearly, the 200-day line is always a bounce, a support region, but even here, if we hit the $170 mark, I think I'll then get active and buy the stock accordingly and just leave it in my portfolio. So let's talk about the stocks I've recently added to my portfolio, and these are, well, as you'll know if you've been following my videos, there's actually nothing new here. Yes, a German stock exchange, which due to volatility is naturally performing very, very well. We've seen that here too. Yes, Trump and the tariffs that also made the German stock exchange share perform very well. But that also applies to other exchange operators like, for example, Nasdaq or CME. There are others too that perform quite well when the market is bad, and I see that as a hedge. So a large part of my money went into this from the stocks I sold. I hope to gain about 10% in the next few weeks and then reallocate that. So a rotation has taken place for me, naturally also broadly diversified into these tanker stocks. I believe I won't go into every single one of them now, but first just on the main showpieces. So Frontline for oil tanker stocks, because the charter rates for crude oil tankers have just, well, exploded. You really can't put it any other way. That's why I thought, okay, even though the stock has already performed quite well, but I think there's still plenty of potential here in terms of its valuation. And I don't believe, as I said, that the conflict in Iran will be resolved very quickly, even though that would, of course, be desirable. But I'm following this, I'm active in it. It's also fun to be a bit active on the stock market. And so I invested in it just like Flex LNG, because LNG freight rates have exploded similarly. And the stock actually hasn't really performed that well yet. Yes, I still see significant upside potential here, even more than with the tanker stocks. And that's why I also bought Flex LNG. You can find all the details in my last video then about the tanker stocks. Yes, one about crude oil tankers and one about LNG tanker stocks. I'll put the links to all the videos once more in the video description. Please feel free to check them out. And otherwise, yes, I'm really glad you tuned in. And please do write, as I mentioned in the comments, what you think of this video, where I'm essentially, yes, taking you along to show how I trade, whether you find it interesting or perhaps not. I'll base it on how many thumbs up the video receives in relation to its total views. Then I'll have a pretty good benchmark, and I hope we'll see each other again in one of the next videos. Many thanks, of course, to the channel members who get to see this video earlier. And until next time, all the best, much success, and ciao.